Hi everybody, we're chatting with Chris Gaffney, President of Everbank World Markets. I'm Jeff Yastine, and we're talking about precious metals. So Chris, welcome.
Thank you, enjoy being here.
Tell us what your sense of the gold market is these days. Gold's done actually fairly well this year, considering the overall environment. What do you see going forward?
It's held in there. We pulled back below 1,300 here recently, but I'm actually a little amazed that we haven't pulled back even more, because it's got a lot of headwinds for precious metals right now, with rates looking to go higher really globally. We've got a lack of inflation. And also, quite honestly, the cryptocurrencies have stolen some of the thunder away from maybe some of the speculators that typically would be in the precious metals markets. But in spite of all that, it is holding around 1,300. Going forward, I think we've now priced in some of those bad items, if you will, the higher interest rates. We've already seen the slide because of that. And so I think it's an opportunity to perhaps start building back into the precious metals, gold in particular. And I think that going forward, you'll see it, probably start to move back higher again, especially as we see increased demand out of India, China, the expanding middle classes in those countries.
What do you tell people when they say, I read about gold, but I don't know, I never really bought physical gold and what have you. What do you tell them about why, especially nowadays, why do they need to have some small portion of their assets in physical gold?
Yeah, and that's the key. It's diversification. It's a non-correlated asset class, but it's really all about getting some of your assets outside of what is traditionally most people's investment portfolio, which is stocks and bonds and maybe some real estate. So it's smart to have something into the alternative asset classes. Precious metals is one of those asset classes. As far as how you hold that precious metal, I mean, physical metal is good, what they call catastrophe insurance, if you will. It's nice to have something that you can reach back on. It's a tangible asset. It's something that you can hold, that it's there. But you can also keep, if you just want to take advantage of the price fluctuations in the precious metals, you can do that through unallocated accounts, through custodial accounts, or even through the ETFs. There's several ways you can get exposure into that precious metal.
How much awareness do you think people even have about that? Because I know for myself, sometimes I'll talk to people who are not really, they don't know or don't really understand the gold market. And when you start talking about physical gold, it's like, well, what am I going to store that stuff in my kitchen drawer? I'm going to dig a hole in my backyard. Do you think people don't quite always understand the degree of options that you have to safely, securely hold gold in various forms?
Oh, certainly. I think especially here in the U.S. I mean, overseas, especially in Asia, there's maybe a little more mistrust of the banking system, and therefore it's more common for them to hold their wealth in the form of precious metals, both jewelry and coins and bars. Here in the U.S., there isn't such a good understanding of that, and there are several different ways, safe ways, to invest into the precious metals markets and have those safe kept for you. You don't have to just take delivery and bury it in the backyard. There's some great alternatives, and at Everbank we have the precious metals accounts where we will custody that precious metal for you, and I think it's a great alternative.
Can I ask you a question about silver?
Oh, yeah.
So often we talk about gold. Silver is a precious metal, yet it has different qualities, because it's a different kind of metal. Is silver something that people should
more
ponder?
Industrial, and I'm going to take it one step further and move towards platinum and palladium. Now, palladium's been the big star of the markets in 2017, so far up about 44%. But platinum, I think, is trading at a discount to gold right now. And the reason for that is because the automobile, the main use of platinum, 50% of the platinum use is in catalytic converters for automobile engines. And of course, with the automobile engines decreasing, automobile sales decreasing globally, and the flight towards more electric vehicles, platinum got really pushed down. It's more rare than gold. It's got more industrial uses, and therefore it typically trades at a premium to gold. Right now it's trading at a discount. I think it's a good opportunity. And also, there's it just went a little bit in surplus, but there's a supply deficit. If there's any increase in automobile consumption, there's going to be a supply deficit in platinum next year again. And that should propel the price higher. So platinum, I think, is a good opportunity.
I'll ask one final question here and just kind of steer it back towards gold. If gold is insurance, what are some of the things on the horizon as far as why people should own gold in terms of things that are out there in the world that we need to be concerned about?
North Korea is number one. I mean, geopolitical risks, North Korea is a major one. I think a bigger risk even than that, though, is the amount of debt that the central banks have accumulated.
Yes.
And the printing presses have been absolutely on overdrive as far as printing money. That money has not yet had an impact on inflation, but the precious metals and gold in particular is a good hedge against the negative impacts of inflation and or all of that debt that's swirling around. Fiat currencies, you want a tangible asset in your portfolio to help hedge against some of those risks.
Chris, thanks for chatting with us for a couple of minutes here.
You bet. Thanks, Jeff.
And we've been chatting with Chris Gaffney, President of Everbank World Markets.